This indicator is amazing. It helps you to know if the market is trending or not trending. It helps you to measure the strength of the current trend, and it also gives you buy-sell signals. And in this video, I'm going to teach you a trading strategy based on this indicator that gives the most accurate buy-sell signals ever. Alright, to add this amazing indicator to our chart, here we click on indicators and we search trend strength signal. This one, which is written by Algo Alpha. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. We have a cloud here, which is a special calculation based on moving average and standard deviation. When the price goes above the cloud, it's a buy signal and the candle becomes green, and when the price closes below the cloud, this is a sell signal and the candle becomes red. So basically, by watching the color of the candles, you can find out how the market is moving. When the candles are green, the price is advancing, and when the candles are red, the price is declining. And in times that the candles are white, which is when the candles are inside the cloud, this is neutral, which means that the market is not trending. This trending that we're talking about is short-term trending. This indicator is suitable for identifying short-term starting of a movement in the market, and so we can use these buy-sell signals for entering a trade. I'll explain later how you can filter the bad signals and only take the ones that are profitable. The color of the cloud can also help us to measure the strength of the trend. When the color is lighter, this shows a stronger movement of the market, and when it becomes darker, it shows weakness in the trend. We have also a vertical bar here that has the same functionality like the cloud, and it helps us with measuring the strength of the current short-term movement of the market. For example, right now the cloud color is light, which shows a strong declining of the price, and here you can see that we have the measurement here at the top, which shows a strong declining of the price for the current movement of the market. Alright, now we give this indicator a special setting that makes it a smoother indicator and less responsive to the price action, and so it will help us with a little bit longer term movement of the market, so we will be able to make good profit. Here we go to the settings of the indicator, and here for the period we set it at 55. Alright, now you can see that many of the false signals are removed, and we have better signals now which help us with a longer term movement of the market. But this is not enough, and we need another layer of filtration that can help us to further remove these kinds of signals that are just showing very short-term movement of the market. So here again we click on indicators and we search CCI, this one, commodity channel index, and we need to change the settings of this indicator. So here we go to the settings of CCI, and here for the length we set it at 100, and then here in the style tab for the upper band we set it at 70, and for the lower band we set it at -70. Alright, we're done with CCI and our setup is ready. This is more suitable for short time frames for scalping and day trading. So time frames like 1 hour and lower are good choices. Right now we are on 15 minutes time frame. This is the price chart of euro to US dollar, but no limitation on this, and you can use this trading strategy on any other asset or market, whether it's forex, crypto or stock market. The only requirement is high trading volume and liquidity, because we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss and profit. Alright, now let's see how we trade based on this setup. In this trading strategy, in this indicator, the focus is only on the signals. When we have a sell signal here in CCI, the CCI line should be below 0 but not below -70. So when this candle is closed and we have a sell signal here in CCI, the CCI line should be between 0 and -70. If it is below -70, it shows oversold and the signal is rejected. But when it is above -70, we have more probability for the price to decline further. So here the sell signal is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss for this trade is placed above the cloud and the profit at 1.5 risk to reward ratio. Moving on the chart, here we have a buy signal, and a buy signal is confirmed only if in CCI the CCI line is between 0 and 70. So here the buy signal is rejected, and it was a correct rejection because you can see that the price declined after that. Here we have a sell signal and CCI line is below 0 and still above -70. So the sell signal here is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss above the cloud and the profit at 1.5 risk to reward ratio. Moving Moving on the chart, no signal around here up to this point where we have a buy signal, but this is rejected because CCI line is below 0. And after that, we don't have any signal here up to this point where we have a sell signal, and this sell signal is also rejected because here CCI line is above the center line. Moving on the chart, here we have a buy signal, and when we check CCI, we can see that CCI line is above the center line and below 70. So the buy signal here is confirmed, and we can enter a long position based on this signal here at this point when this new candle is opened. The stop loss for this trade below the cloud, and the profit at 1.5 risk to reward ratio. Moving on the chart, here we have a sell signal, but this sell signal here is rejected because CCI line is above the center line. And after that, we have another buy signal here. And when we check CCI, we can see that CCI line is between center line and 70. So the buy signal here is confirmed, and we can enter a long position at this point with the stop loss below the cloud and the profit target at 1.5 risk to reward ratio. Moving on the chart, here we have a sell signal, but this is rejected because CCI line is above the center line. And for this buy signal here, this is also rejected because CCI line is above 70. It is true that it was a good signal and the rejection was not correct, but this indicator is added here to decrease the risk. We may lose a good signal like this, but on the other hand, we also prevent many bad signals. So always be patient and wait for a perfect setup. And please pay attention that you can never remove all of your false signals. No indicator or a strategy can give you 100% guaranteed signals. This is not possible in reality, and losing positions are always part of the game, so you need to manage your risk properly. Otherwise, you will lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping and day trading. By the help of this strategy, based on the level of your stop loss and your balance in your trading account, your position size is calculated in a way that you will lose only 1% of your trading account in case if the market goes against you and hitting your stop loss. For example, if you have a $1,000 trading account, in case if the price hitting your stop loss, you will only lose $10, which is 1% of your trading account. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.